Hello and welcome to this October 7th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at PNRA Bread, ticker symbol PNRA. This is about a $2.8 billion consumer discretionary company. Taking a look at the chart, and we haven't featured many shorts of late. The market's been pretty strong, but the NASDAQ did take a pretty good hit on Wednesday, and a number of stocks that have been performing very well were hit, and many on very strong volume, and also a lot with negative divergences in play. PNRA is one of those. You can see the stock was trading down around $73 in mid-August. It ran up almost $20 in just about a month and a half before putting in a bearish engulfing candle right here on the top. That is a very ugly reversing type of a candle off of an uptrend. And you can see here, I didn't mark it, but the volume was very heavy on the selling and the reversal. So we've got this reversing candle in play with heavy volume, and ordinarily that by itself would indicate that we would probably experience some short-term weakness. But the thing that makes this one maybe a little bit more bearish is the fact that we've got a negative divergence in play. Anytime we get a reversing candlestick off of an uptrend with a negative divergence, we tend to look at the stock much more bearishly. So if we are in the stock, or we have members that are in the stock on the long side, this is when you see something like this occur, generally not a bad time to lock in some profits, move back to the sidelines, and wait to see if this divergence plays out. Now, by playing out, what I mean is normally when you get these negative divergences like this, and the MACD has started to roll over, you can see what the negative divergence is the prices continue to move higher. But the MACD, which is the difference between the 12-day and the 26-day moving average, you can see that right over here, 12 and 26. The difference between those moving averages is actually starting to converge. Normally when prices are moving up, the 12-day moving average moves up faster than the 26-day, and that's what creates the movement in the MACD to the upside. But when you start seeing prices moving higher and the MACD moving lower, that is an indication of slowing momentum in the stock. And anytime you get that coupled with a reversing candlestick at the top, I don't take a chance. It's not to say that the stock can't go higher. It's just obviously a little bit more, it's a little trickier, I think, in terms of just wanting to be careful here. So we've got the negative divergence in play, which I think is pretty evident. We've got the reversing candlestick. The other thing that's a little bit bearish here is notice that during this entire move to the upside over this month and a half, and it's about a 30% rise, notice that the volume continues to decline. So as prices kept moving up, and each time we took another step to the upside, the volume that was supporting the move to the upside actually was diminishing. So you've got lessening volume, lessening bullish momentum, and a reversing candlestick all coming together here. So what we try to do is look at the market and look at individual stocks and take a look at what we think is the best odds scenario. Obviously there's nothing in the market that's a guarantee, but when we start seeing some of these things come together, we just feel like the odds are greater that PNRA could be running into some difficulty here in the near term. So what does that mean? Well, if you like to short the stock from the current price up to the high on this reversing candle, which is up near $92, I think between that $91 and $92 area wouldn't be a bad area to either take a short position or add to one. If we were to move back up into that area, watch 92, maybe a little bit above 92 as a possible closing stop on PNRA. And to the downside, what we look for is when you get the negative divergence, we like to see a reset of the MACD, which generally coincides with a 50-day test, which is down here just below $83. So that's what we'll be looking for here in the near term. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.